European Investment Bank is the Bank of the European Union, and we're really looking forward to her contribution, to hear from the machine room for the funding of the European Union about green finance scaled up. Thank you in advance, Mrs. Elina Kamenitzer. The floor is yours.
Okay. Thank you very much for the kind introduction, and good afternoon, ladies and gentlemen, fellow speakers and panelists. It really is my great pleasure to be here today and deliver this keynote speech on behalf of the European Investment Bank. In the next 20 minutes, I will indeed talk about scaling up green investment and green finance. To set the scene, nevertheless, and although I think a lot has been already said about the triple planetary crisis in this event, I presume, I will first recall the big picture a bit, if you will, and before diving then deeper into EIB's green finance agenda, I will shortly reflect on what Europe and European Union have done so far to mobilize capital for low carbon transition. I will finish my keynote with few words on the key challenges we are facing to further scale up and on some ideas how to overcome these obstacles. And now to that scene setting. The debate of what should we do to meet the climate goals of the Paris Agreement, halt the temperature rise to 1.5 degrees and build climate resilience is without any doubt one of the most critical ones of our time. The latest IPCC report again shows that we are struggling to mobilize and take action. Decouple economic prosperity from fossil fuels and secure just transition to low carbon and nature positive future. The writing is in any case on the wall. We are witnessing climate change globally, including here in Europe. Scorching hot summers like last year here in Luxembourg, droughts, flash floods, and more frequent and severe storms and wildfires. Glaciers are melting at an alarming speed. Losses and damages are therefore increasing. Tipping points are nearing, and ecosystems globally are really struggling to cope. I had recently, a few months ago, a privilege to listen a keynote speech by a Nobel Prize laureate and renowned climate scientist, Professor Kaivesh Luchka. I'm sorry, the pronunciation may not be correct. And she reminded us that the scientific evidence is undisputable. Climate change, as we experience it today, is man-made. The science can show us what needs to happen to slow down the climate change and to reduce its impact, but science, unfortunately, has no answers to the question how to take the action. The action plan and its implementation, if you will, are rather a matter of social contract and depend on political and economic decision-making, actions of the civil society, and importantly and consequently, the dynamics of financial markets. And now I move on and say a few words on the EU's climate leadership and EIB's climate ambition. While the platform is burning, the European Union has made some really bold moves and positioned itself firmly in far front of the climate action. The European Green Deal was launched in 2019, as you probably all know, and the Union at that time set itself ambitious goals for 2030, supported by the EU climate law that foresees the greenhouse gas emissions to be cut at least 55% compared to 2090 levels until the end of the critical decade. Moreover, the EU's Fit for 55 package is aiming to further align current regulation with the climate targets, including the net zero goals of 2050. While recognizing that the EU must act and cut greenhouse gas emissions, the negative impacts of changing climate are unavoidable already. As a response, EU strategy for climate adaptation was adopted in 2021. The strategy not only emphasizes the importance of building climate resilience in the EU, but also outside in the developing world, where the negative impacts of the climate change are often felt disproportionately to their share of the global greenhouse gas emissions. While we do need conducive policies and regulation, such as carbon border adjustment mechanism or transparent reporting regime to advance on the low carbon pathway, combating climate change is not only about policy steer. According to the estimates, we need over 500 billion euros worth of additional investment annually to reach the EU climate goals at the end of the critical decade. Globally, the investment needs are calculated in trillions. We must scale up investment in low carbon and renewable power and in energy efficiency. This is not only to combat climate change, but also to tackle the current shock in energy markets provoked by the Russian invasion to Ukraine. We also need to fund the electrification of transport and heating sector, finance the development of second low-carbon energy carrier, and decarbonize the high-emitting industries. While the European Commission is allocating unprecedented amounts of funding to green, including their target to mobilize 1 trillion worth of investment in sustainability by 2030, we are compelled to find further ways to redirect public and, importantly, private financial flows to green assets in the coming years. While private finance and capital markets need to play an increasing role in funding green investment, the international financial institutions and multilateral development banks such as EIB, the EU Bank, have an important role to play to bridge the gap between public and private and enable the leveraging of scarce public resources and crowding private funding for scale-up. That said, in support of the EU Green Deal, EIB took a bold decision in 2019 to transition to the EU Climate Bank, and we set ourselves 3 ambitious operational goals. Namely, we pledged to align all our financing activities with the principles of the Paris Agreement by the end of 2020. We also said that we will increase the share of climate action and environmental sustainability financing to at least 50% of our annual lending by 2025. And we also endeavor to support not less than 1 trillion worth of investment in green assets by 2030, and to help up to scale green financing in critical high-emitting sectors and in areas key for climate resilience and protection of nature. Moreover, in line with our revised energy lending policy of 2019, the bank has now stepped away from financing investments linked to unabatable fossil fuels. To further guide our green transition, we draw ourselves the so-called Climate Bank Roadmap. As we heard, we call it as the CBR. It is a playbook, if you will, setting the frame for our climate action until 2025. It is a multifaceted document that you actually can find online that describes, among others, how we are aligning our activities with those Paris goals and our green definitions with the emerging EU taxonomy. It also explains how we are enhancing our climate and environmental risk management capacities and currently applied methodologies where we consider both physical and transition risks associated with our investments we finance and with our counterparties. I would also mention the shadow carbon pricing metrics that we revised as part of the CBR exercise. Bank has been using the shadow cost of carbon in our economic testing since 1990s, but we decide to revise the pricing upward both in short and long term to ensure that the projects that bank finances contribute truly to the transition to the net zero by 2050. The CBR is not, nevertheless, only drafted as a policy document, but centering on the key objectives of the EU Green Deal, it also provides us guidance for further green business and product development. I would like to, is the point? Yes, sorry. Okay. In this slide, you can see now our targets and also how we are progressing in meeting them. And I would now say a couple of words where we indeed are today in implementing the CBR. We are at midway of the implementation period. Overall, we are on the way of meeting the goals and mainstreaming green in our activities. We have been aligning our lending activities with the Paris goals indeed since 2020, and in 2022, green financing accounted for already 58% of our annual financing volume, in euro terms, 36.5 billion. We are also well underway in reaching our 1 trillion target. At the end of last year, the cumulative value of investments supported reached 222 billion euros. Sector-wise, renewable energy, energy efficiency and green mobility remain the key drivers of our green financing activities. In 2022 combined, these sectors represented some 67% of the total green financing volumes. Well, here I will take a small sidestep and mention an example of EIB supporting the scale-up of low-carbon investment and energy transition. The bank has played a pivotal role in the development of the European wind energy sector, offshore wind in particular, in financing the development of the first European offshore wind farms back at the day and seeing the segment through its current maturity. Now again, EIB is supporting the development of next generation wind energy technologies. The bank provided 60 million euros of financing to the first ever floating wind farm project in Portugal, and others have followed. Importantly, this high-risk venture was enabled and benefited from Energy Demonstration Project Facility, the thematic investment program under Innofin, the EU Finance for Innovation, which was supported by the funding of the European Commission Research and Innovation Programme Horizon 2020. While similar smart financing schemes are now available under InvestEU programme, the example demonstrates the need not only for funding, but also for financial instruments that enable de-risking of technology demonstration investment. Such investments then are paving a way for further scale-up and for crowding in of private sector capital to support commercialization of new emerging low-carbon technologies. That being said, support for green innovation is one of our key focus areas for business development going forward. I will say some more words about technology scale-up in a minute, but we'll round up this part of my keynote with few words on our plans for the coming period. As we are striving to further increase our climate action financing, we have also an ambition to elevate our lending to climate adaptation relevant projects and have set ourselves a target to increase the climate adaptation finance to 15% of our total climate action financing by 2025. Also, while valorizing nature and monetizing nature positive investment remain a significant challenge, we are also looking for ways to direct more capital for such measures going forward, and indeed leveraging on particular on EU resources, again for de-risking. In this slide, you can see some of the other areas where our future focus lies. And in terms of product development, the bank is deploying the full product palette for the benefit of green investment, from early stage venture debt financing and thematic high-risk funding to project finance and long-term senior debt. Specifically targeting green, we are also offering our borrowers green loans and have a capacity to subscribe green bonds issuances. As for the latter, it may be worth of recalling that EIB actually was the first issuer of first ever green bond in 2007. and we can now leverage on that experience as market maker in the segment, in that segment, also as a green bond investor. So I have now recalled what climate change is about and discussed some of the actions the EU is taking in combating climate crisis, and explained what the EIB in particular is doing to support scale-up of green investment. I will finish with some reflections of the next, on what next. What are we to do to accelerate investment in low-carbon future and redirecting capital for green? Here are my topics for the buzzwords: regulation, collaboration, and innovation. So let me explain. First, we do need smart regulation and standards to incentivize green investment and direct finance to these assets. For example, I mentioned the carbon border adjustment mechanism. Also, the EU taxonomy is a tool helping investors to understand whether economic activity they are financing and supporting is environmentally sustainable. Setting a common language between investors, issuers, project promoters, and policymakers, the taxonomy allows investors not only to assess if their investments are meeting robust environmental standards, but also to steer away from greenwashing. The emerging new Corporate Sustainability Reporting Directive and Corporate Due Diligence Directive will also bring transparency to the market, as importantly, what is reported often gets managed. That is one of my favorite sentences. And by that brought into the core of corporate strategies, which in my view is key for building a business case for green, both in the real sector and amongst the financial institutions and investor community at large. On the other hand, over-regulation should be avoided, and simplification may be needed in some areas such as permitting to accelerate investment going forward. Second, we need closer collaboration and partnerships between public and private. To improve business case for green, smart joint designed incentive schemes are needed to cross over those valleys of death. For example, close public-private partnerships are needed to accelerate deployment of low-carbon technologies such as hydrogen at scale, to boost investment in energy efficiency and build capacities for project implementation. Here, the European Investment Bank can play actually a key role, again, in bridging public and private, and in developing financial and advisory instruments that ease private sector's access to public support and allow leveraging of those scarce public resources. I will close this point with an old proverb or its variation. If we want to go fast, we may go along, but if we want to go far, we better go together. And finally, we must invest in green innovation and scale up of low-carbon technologies. Meeting the climate targets of the Paris Agreement requires substantial boosting of green RDI from its current levels. Many industries, such as green technologies, are not yet sufficiently mature to be competitive to be deployed at scale. 50% of technologies to get us to net zero are actually still yet to be commercialized. And as a further example, out of those technologies needed to decarbonize the energy sector, 1/3 are still at the demonstration and prototyping phase. Against that backdrop, EIB's experience points to the need to support these investments with advisory, financing incentives, and innovative financing schemes, all the way from early-stage RDI through pilot plant experimentation and up to the scale-up and establishment of new markets, which are very often not existing at the time when the first investment decisions are made. That being said, EIB is one of the largest public supporters of innovation. In the past 8 years, EIB has provided funding of approximately 150 billion for innovation investments. One of our lighthouse projects includes financing of Northvolt demonstration plant for manufacturing of electric battery packs in Sweden, and the further scale up of the production capacity at commercial scale, a venture which is first of a kind by a European investor. Finally, I would like to underline that to accelerate low-carbon investment, it is crucial to build up wider ecosystems around the key sectors. Apart from human capital and know-how that is mentioned by many as critical for green transition, many European companies have also identified lacking European industrial manufacturing capacity as one of the bottlenecks for low-carbon pathway. Financing is therefore needed not only for deployment of clean breakthrough technologies, but also for manufacturing of existing, more mature technologies, such as wind turbines, electrolyzers, solar panels, and heat pumps. Currently, Europe's dependency on China as a low-carbon technology supplier, including critical raw materials, is very significant. On the one hand, US is gearing up to mobilize $330 billion of funding for green by 2032 with its Inflation Reduction Act. EIB is targeting to address some of these impediments and hindrances with our contribution to Repower EU and through financing activities that support the implementation of Net Zero Industry Act and Critical Raw Materials Act. I think my time is up now, and I would like to end by emphasizing that in order to provoke more climate action, scale up investment and direct financial flows to green, climate and sustainable cannot remain as a separate item on the agenda and amongst the topics under the subject line any other business. Climate considerations must be embedded in all private and public decision-making, corporate core strategies, and choices made by the civil society. To me, in the end, it's all about collective mainstreaming, and I will finish with coming back to the notion of that social contract. Maybe we ought to consider that in order to take climate action, we need to collectively, financial markets including, further pivot our focus on that long-term business case and gain rather than continue fearing for that short-term pain. Thank you very much.